It's still in the thick of earnings, and let's talk about Bikaji Foods. They've actually seen the highest palm oil prices in the quarter gone by, and on a year-on-year basis, of course, there's been a fall. So let's try and understand, how these nitty-gritties actually play out for Bikaji Foods. We have with us Manoj Verma, the CEO, and Rishab Jain, the CFO, joining in on the show right now. Manoj, Rishab, both of you, thank you so much for taking the time out and joining in. Manoj, if I could, kickstart the discussion with you. For the first quarter, help me understand what was the big picture like with what was happening with palm oil prices and how volumes as well as prices for you panned out.
Yeah, good morning and thank you. So first quarter in terms of our bottom line has been, the continued numbers what we have been delivering not only in this quarter, in fact, for last 3-4 quarters, if you look at it. So it's been really good in terms of bottom line. Talking about the top line, this quarter, after many quarters, this industry, this category has witnessed growth led by volumes. So we have grown at 15.2% in terms of volume and a value growth of 15%. So that's the delivery what we have seen. And this is, if you look at growth over last quarter in YOY over last year, so EBITDA is gone, far beyond what we thought for also.
I think we'll get you back again. I think, there is a bit of a technical problem there, Manoj and Rishabh. We'll just, get you right back up. Bikaji Foods, for the quarter gone by, it's been a very interesting one for commodity consumers, pharma companies, tire companies, paint companies, because commodity prices had declined. When we are looking at numbers for the quarter gone by, remember we are talking about June, July. That we are talking about April, May, June. We are in August, and post that it's only commodity inflation which has made a comeback. So Rishabh, while we are talking about numbers for the quarter gone by, where palm oil prices had come down, transportation cost had come down, grain prices had come down, and now it's different. Tomatoes are expensive, potatoes are expensive, प्याज महंगा हो गया है, everything has gone up.
No, true. So, yeah, in last 1.5 months, we've seen again showing some inflation in key commodities. But yeah, we have done some smart thing. We have done some smart booking of long-term booking of key raw materials, which will have negligible impact on our overall costs. So that's what we have done in early when the crop time was there. So that's what our strategy was. But of course, yeah, in last 1.5 months, we've seen good inflation rising back again.
Rishabh, for the quarter gone by, your volumes were at 15% because you continue to guide at 20%. What you're reporting is 15%.
Right.
So are you in for a big quarter? Do you think that this time around Diwali, Dussehra, more farsan would be sold?
So basically, you will see in last 5, 6, 7 years, we have been growing at 13 to 15% volume growth versus 21% value growth. This quarter, we had the highest volume growth of 15.5%. That's what volume growth we had done. But yeah, of course, the price growth was negligible, and that's what we're seeing in numbers. So our value growth is also 15%. But overall, at the year end, what we are targeting and looking at that we should be above 15-16% volume growth. Of course, price growth, we'll see how it goes for, how the commodity price go for. But yeah, the volume growth what we are targeting is above 15-16%.
Rishabh, I always look at one number to understand which way company is moving, and that is return on capital employed.
Right.
Where do you see your return on capital employed? I mean, Manoj, Rishabh, anybody can answer that. Where do you see your return on capital employed as the entire volatility of the commodity pricing settles down?
Right. So you will see currently we are at capex expansion cycle, right? So we have done major expansion in the last 1.5 years. By end of FY24, we'll complete our capex cycle, and we are investing close to 440 crore rupees in our capex, what we have started in 21. So of course we got PLI benefit for the same, and we've completed our capex cycle. Currently our asset turnover ratio is close to 40 to 43%, and we're targeting to taking to 75-80% in next 3.5-4 years. So that's what target we are taking in, and we will be at par with the top FMCG companies what they have ROC. We also want to be 35-40% type of ROC, and we are gunning for the same.
Manoj, morning. What is the outlook when it comes to the competitive intensity as well? Because it's not just the unorganized sectors. You have a lot of niche brands as well that are coming up with, these sort of healthy snacking options, etc. So what's the USP? What's the game plan to take on competition? How are you dealing with that and growing your market share?
So certainly competition is pretty intense. So what we are doing, I'm sure our competitors are also doing the same. So how we're trying to be, ahead of curve is our focus on distribution. That's one. Second is our continued focus on our marketing investment. That's number two. And third is about, improving our efficiency, sales efficiencies. These are three key vectors which our teams are working on and are giving back pretty good dividends.
Okay, fair enough. What about the benefits that you're looking to reap from the PLI scheme? You got the first tranche of close to 20 crore rupees, if I'm not mistaken, in the month of March. How much will you be getting for FY24?
So basically, overall, at the overall level, we got close to 261 crore rupees, which we'll get in next 6 years. So first tranche was 20 crore, which we received in March 23. This year, so there are some filing which are going on. So we're targeting to have second tranche of from government, which is close to 30 crore rupees.
Manoj, what will be the total net capacity addition? Because you are in the middle of a capex cycle, like Rishabh said, I'm aware of it. By FY24, what will be the capacity addition on stream?
So the capacity, most of it we have already done. It's it's one plant which is to come in Bikaner. This is a frozen plant which will come by end of this calendar year, and another plant which is coming up at Raipur in Chhattisgarh. These are two more plants. That's what would be the final stuff, which would be around 9,000 metric tons per annum capacity. That's what we'll add more.
And out of this 9,000 metric ton, how much do you think would in a sense be captured in FY24 is what I'm trying to understand, because the volume growth number what you're giving, does that include the upside which will come from the from the new capex addition?
See, what we are talking is that what all will be our investment, and this is basically a prerequisite of getting PLI incentive, is to complete this by FY24. So everything will come within this year. However, we are in an expansion mode, so the utilization would come, over years, kind of a stuff. That's what will work like.
Sure, Manoj, Rishabh, both of you, thank you so much for taking the time out and joining in today on the show. Good speaking with you today on ET Now.